After years of juggling school runs and family logistics, the career has finally been rebooted. Working as a freelancer from home in the UK with a first client all the way in New Zealand, the first invoice for 5,000 New Zealand dollars has just been sent. Cue the celebration. But then came the questions. Do I use today's exchange rate or the one when I get paid? Wait, do I pay tax in both countries? And why is my bank charging me £100 to send my own money? Welcome to the freelancer's international rite of passage. Let's untangle it. Step 1. When did you earn the money? Before exchange rates, you need to decide when the income was earned. If you've got a limited company, you use the invoice date, not the payment date. That's called the accruals basis. And if you decide to operate as a sole trader using the cash basis, you'd go with the payment date. Step 2. What's it worth in pounds? HMRC doesn't care what your client's bank used. You need a consistent method. The most practical option? Use HMRC's monthly average rate for the month you invoiced. So, if you invoiced in May 2025, the month's rate was 2.2443. So, your official income in sterling would be locked in at £2,227.87. Doing all this manually? Painful! Platforms like Joypilot automatically convert foreign invoices to GBP using official rates, log the right amount, and track any currency gains or losses when you move the money later. But what if they mention withholding tax? That only applies if you physically go to New Zealand and either spend more than 92 days there and earn over 15,000 New Zealand dollars while on the ground. If you stay in the UK, no tax withheld. If you work on site longer than that, your client may need to deduct 15% unless you get an NRCT exemption in advance. Even then, you can claim any NZ tax paid as a foreign tax credit on your UK return. It's paperwork, not double tax. Do you add VAT or GST to your invoice? No and no. Because your client is overseas and a business, your services are outside the scope of UK VAT. And if they're registered for GST and NZ, you don't charge that either. So the invoice? Simple. Just the amount. No added tax. How should I get paid? Traditional bank transfer? Bad idea. It's slow, expensive, and the exchange rate is brutal. Use a platform like Wise, Revolut, or Airwallex. They give you local NZ bank details, so your client just does a normal domestic transfer. You then convert the NZD to GBP at great rates, on your terms. Savings? Often over £100 per invoice. So, let's go through your simple game plan. Invoice using your chosen accounting method, probably invoice date. Use a consistent FX rate, monthly average as your friend. Don't charge VAT or GST. Work from the UK? No tax in NZ. Get paid using smart platforms, not your bank. It started with questions, but ended with a clean system. No more guesswork. No more currency chaos. Just a clear path from invoice to income, and the freedom to focus on the work, not the tax return. And remember, if you really want peace of mind, give No Worries a call. Because business should feel good, not just look good on paper. Less stress, more momentum, that's how we like to roll.